Hey there, future Wall Street wizards. Ever wondered where those stock prices you see on TV come from? Well, buckle up because today we're diving into the exciting world of stock exchanges. Imagine a giant marketplace buzzing with activity where buyers and sellers come together to trade pieces of companies. That's essentially what a stock exchange is. It's a regulated platform where you can buy and sell stocks, also known as shares, of publicly listed companies. These exchanges are like the beating heart of the financial world, connecting companies looking to raise capital with investors like you and me, eager to own a slice of their success. Think of it as a matchmaking service for businesses and your money. So the next time you hear someone talking about the stock market, remember, they're referring to this vast network of exchanges where the magic of investing unfolds. Now you might be thinking that's all well and good, Jim, but why should I even care about stock exchanges? Well, my friend, let me enlighten you. Firstly, stock exchanges provide a transparent and regulated environment for investing. This means everyone plays by the same rules and you can be confident in the integrity of the transactions. No shady back alley deals here. Secondly, they offer liquidity. That means you can easily buy or sell your stocks whenever you want. Need cash quickly? No problem. Just sell your shares on the exchange. Thirdly, investing in the stock market through exchanges allows you to become a part owner of some of the world's most successful companies. Yes, you heard that right. You can own a tiny piece of Apple, Reliance, or any other publicly traded company you fancy. So, whether you're a seasoned investor or just starting, stock exchanges provide a fantastic avenue for growing your wealth and participating in the global economy. Okay, enough with the why, let's talk about the how. You're probably curious about what actually happens on these stock exchanges. It's not all yelling and hand signals like in the movies, though it can get pretty intense. First things first, a company that wants to sell its shares on an exchange needs to get listed. This involves a rigorous process of meeting certain financial and regulatory requirements. Think of it as an entrance exam for companies. Once listed, the company's shares are available for trading on the exchange. Now this is where you, the investor, come in. You can place an order to buy or sell shares through a broker, who acts as your intermediary in the market. The exchange then uses a sophisticated system called order matching to match your buy order with a corresponding sell order. It's like a giant puzzle where every buy must find its perfect sell. And voila, a trade is executed. Finally, there's the settlement process, where the actual transfer of ownership and money takes place. This usually happens a couple of days after the trade is executed, and that's it. You're officially a shareholder. Section 4. Not all exchanges are created equal different types. Now that you know how stock exchanges work, let's talk about the different types. You see, not all exchanges are created equal. They can vary based on their geographical reach, listing requirements, and trading mechanisms. First up, we have national stock exchanges like the New York Stock Exchange in the US and the National Stock Exchange of India in India. These are the big leagues, home to some of the largest and most well-established companies in the world. Then we have regional exchanges which, as the name suggests, focus on companies from a particular region or country. They provide a platform for smaller companies to access capital and for local investors to participate in their growth. And finally, we have electronic communication networks, or ECNs. These are fully electronic platforms that operate 24/7, connecting buyers and sellers directly without the need for traditional brokers. Think of them as the digital revolutionaries of the stock market world. Each type of exchange has its own advantages and disadvantages, so it's essential to do your research and choose the one that best suits your investment goals and risk appetite. Section 5. Around the world in stock markets, major players. Alright, Globetrotters, let's take a quick trip around the world and visit some of the most prominent stock exchanges. Our first stop is the Big Apple, home to the New York Stock Exchange, the largest stock exchange in the world by market capitalization. This iconic exchange is where giants like Apple, Amazon, and Microsoft call home. Next up, we hop over to the land of the rising sun, where the Tokyo Stock Exchange reigns supreme. As the second largest stock exchange globally, it's the go-to destination for investors looking to tap into the Japanese market. Our journey continues to Shanghai, where we find the Shanghai Stock Exchange, one of the two main exchanges in mainland China. With its rapidly growing economy, China's stock market is definitely one to watch. And of course, we can't forget about our very own Bombay Stock Exchange and National Stock Exchange of India, two of the largest and most active exchanges in Asia. From Reliance to Tata, these exchanges are where India's biggest and brightest companies come to play. These are just a handful of the many stock exchanges operating globally, each playing a crucial role in facilitating capital formation and economic growth. Section 6. Keep learning, keep growing your investment journey. So, there you have it, folks. A crash course on the wonderful world of stock exchanges. We've covered everything from their definition and importance to how they operate and the different types that exist. Remember, investing in the stock market can be a roller coaster ride with its fair share of ups and downs. But by understanding the fundamentals of stock exchanges, you'll be well equipped to navigate the market and make informed investment decisions. Don't be afraid to dive in, do your research, and start investing. Remember, the only bad question is the one you don't ask. And hey, if a guy like me can make it on Wall Street, anyone can. Now go out there and make some money.